Hey traders, today's a bank holiday. It's the Juneteenth bank holiday. Not all the same. I like to use whether it's a Sunday, whether it's a Monday to prepare for the week. We did have this week in the markets yesterday. And a quick reminder to my futures folks and my sector secrets mastery folks, we do have our probably be about 30 to 40 minutes primer tutorial, whatever you want to call it, on futures, currencies, and Forex, foreign exchange currency conversation. A lot of folks have been asking me, hey, Rog, we know you've been doing this since about 99. Currencies are moving. The macro around central banks and currencies are interesting. So we'll be doing a tutorial on that in the futures room and in the sector secrets mastery room at 9:30 to probably about 10:15 today. So I will see you all there. And let's see. All right, let's see. Okay, I'm trying to pull up the questions here. So as always, if you have any questions, feel free to ask. Let's see. First up. All right. First up is Natty Gas. Sure. All right. So if we take a look at Natty, the only way that I process anything with Natty, there's so many ways, whether it be boil, etc. UNG, we always want to start at the futures contract level. And the question here is there a spike event in summer? So the only spike event we would see would be the expectation that there'll be a winter demand, right? So before the summer demand, there's oftentimes a spike, which we did not get this year. And then there's, of course, a potential winter demand, which that would kick in late summer. So those are all different seasonal cycles, yes. And I don't have my seasonals chart up right now, but we can probably look at that later on this week. But ultimately, what happens with any of these markets that are moving lower is, before we even get to a seasonal conversation, right? Are we starting to see the downtrend doesn't have as strong a grip on natural gas as it has? And I would say the answer to that is yes. The grip that the downtrends that the sellers have on natural gas is loosening. It's not gone, it's just loosening. And so two things are promising. One, that the market trend has shifted from down to neutral. Two, that we are above the 2023 point of control for natural gas. So those are two small but important steps that Natty has taken to eventually probably shake off a lot of that bearish pressure. And then the other question was crude oil. All right, so on crude's a mess, gang. I want to be long crude, but crude is a mess. And what do I mean by that? We have OPEC, which is essentially like a central bank for crude oil. That's really what it is. It's a central bank for crude oil. And whatever they say, their monetary policy, which is their energy policy, which is really their production, their output policy. So imagine their job sort of along the lines of printing money, right? If I'm the Federal Reserve, to what degree am I printing? For the OPEC, it's to what degree am I producing? If they reduce production, it sends crude oil higher. If they increase production, it sends crude oil lower. If there's low compliance for the production cuts, which is what's happening with Russia and the current production cuts, also crude oil is lower. And a lot of crude is going to be then, of course, the demand narrative. So as much as the central bank can help with monetary policy to spur lending and spending, to a certain degree, the price of crude will also encourage possible a little bit greater use. But what they can't quite control, and the Federal Reserve can't do this either, the Federal Reserve can't necessarily make a healthy economy, right? Just like OPEC can't necessarily, in and of it themselves, spur demand. True higher highs in equities, in an economy. True higher highs in crude are going to be really the result of higher demand. And that is something we are not seeing. So whether you're looking at IEA numbers, EIA numbers, the sort of the economy of crude oil, I would keep an eye on things like traffic. Obviously, keep an eye on what the monetary policy continues to be, but it's favoring production cuts with meh compliance. But really, the demand story is ultimately going to be what powers crude higher. And the demand story in crude is not going to be unlike the demand story in the indices. So there's no real way to separate saying, hey, stock market's moving higher, but crude oil is not. At some point, if a stock market is rallying because of economic optimism, it will drag up symbols like crude and symbols like copper actually as well. So I'm not gonna play the seasonal on any of those right now because there are other things that are more a factor, right? As much as I'd love to reduce crude oil behavior to whatever the seasonals are, natty gas behavior to whatever the seasonals are, we're past obviously the driving season rally for crude. We're past the winter, or we're past the summer demand for natty. Natty might have the winter demand. And of course, heating oil is a byproduct of crude oil. So maybe, but I'm not holding my breath for that. We really need something more meaningful for the move. All right. Next up is, let's see here. Microsoft. Sure. Let's jump on over to Microsoft. We'll circle back to the indices in just a bit. All right. So if I were to look at Microsoft, John, if we think index sector stock, that starts us off at the NQ level. There we go. It starts us off at the NQ level. What is the NASDAQ doing? What is this particular index where Microsoft is heavily weighted doing? It's in an uptrend. We know tech has been very much on a tear, mostly because it is not weighted with financials and healthcare, right? So in a lot of ways, the reason for tech strength has a lot to do with tech, but it has a lot to do with what it's not being burdened by. All right, so then we move on to XLK, which is the sector that Microsoft and Apple dominate. And you'll see that too is heading higher. And we finally get to the individual piece. So those are tides, if you will, the tide of the NASDAQ, the tide of the XLK. And then we get finally to the NASDAQ. And what we have here is NASDAQ, Microsoft, right? That connective thread is XLK. And then I don't think to anyone's surprise, XLK and Microsoft are heading higher. Would it be a day trade? John, the markets are closed today, right? I don't know about a day trade, right? We're 24 hours and 24 minutes, 21 minutes from any day trade. Not a clue, right? I don't know. but as far as the overall directional bias goes, whether that be the daily, whether that be even the hourly, I would have to wait until we actually open to decide what to do. From a day trade perspective, I'll have to wait till we get to 9:30. But from an overall directional bias, it's definitely a bullish situation. All right. Next up is seasonality. Oh, no, wait, hang on. There it is. Next up is S&P, NASDAQ, Dow. All right. Yeah, we can take a look. All right. So let's start off with we took a look at the NASDAQ. So let's go and take a look at the S&P. And by the way, I'm on the trading view charts this morning. So S&P is moving higher, obviously, and to a great degree, carried higher by the overall movement in tech. But now that financials are definitely in a better spot than they were even just back late March, early April, even early May, we are for the first time since the drop, we are for the first time within this regional bank crisis in this post, right, all the aftermath of that. First time we're trying to get back above 200. That's going to bode very well for the S&P, more so than the Dow, because now the S&P, of the three cylinders that it has, is firing away on tech and healthcare, and financials, and it's waiting on healthcare now. Now, healthcare is really very much going to be this last sector that the Dow and the S&P are going to need to be able to be firing away on all three major sectors, right? The way tech has. So now we have tech moving higher. Now we have XLF possibly finding some footing above the 200. This is going to be big, right? It's no longer in a downtrend. So talk about structure, right? By June 9, this downtrend was broken. And then now we're seeing significant psychological and technical thresholds like the 200 EMA also being broken. So that bodes really well for the S&P. And as long as tech is strong, and as long as XLF can find footing, say above 3380, this is going to be a significant step higher, not just for traders who want to trade financials, like myself, but also traders who are looking for a path to higher highs for the broader averages. And then the same is going to apply in a different way to the Dow. Dow's moving higher too. Why? The number one weighted sector in the Dow is XLF, right? Is XLF. So ultimately, when we look at XLF, when we look at its connection back to the Dow, remember, the Dow, even though we talk about it as the industrial average, that's practically a joke anymore, right? Industrials, transportation, they're way down the list. First is financial, second is tech, third is healthcare, and then you've got the stocks within, say, IYT and XLI. This is the Dow financials average, right? So yes, if we're going to see the YM play catch up to those more tech-heavy sectors in the NAS and the S&P, healthcare's really got to participate. So important to financials is that 200, and that 200 then is therefore important to the S&P and the Dow. All right, next up is Henry asks, am I ever going to get back to Forex other than futures? No, Henry, no, I will not be. And I say that really decisively because been there, done that. In the US, there's no appetite for it. So as much as I love Forex, if I were in, the last three places that I traveled to teach Forex, none of them were in the US. So I will not be. No. And the wonderful thing though is, if you know what it is that I'm doing with the wave and the grab and historical price by way of the HPMRs, if you've noticed that the futures turnover, the daily amount of dollars that are traded at the Chicago Mercantile Exchange for the majors, right? That number is increasing. We have alternatives in this country, but there is just no audience for it. So I have a limited number of hours per day, and I try to focus on the markets that the most people want to hear from. And Forex just ain't one of them. I'm sad to say, because I love Forex, right? My 3 books are on Forex. I've been trading Forex for over 20 years. So it saddens me, but it's just the reality of being a trader in the US. Very few people pay attention or even want to pay attention to Forex. They just don't. They'd rather talk about meme stocks, which I won't do either, but that's just not where the appetite for information and trading ideas is at all. Let's see. Daniel says, I need a chart like yours. Is it hard to set up? On TradingView, no, not at all, Daniel. It's just a matter of, look, and I've got a lot going on here right now. Yeah. You don't have to have this much, right? You can clean this up. The cool thing about TradingView is, to a large degree, I can simplify things like, the wave and the grab, and I can turn on the HPMRs as I need them. Like, there's a lot that I do like. But what I have running on this chart is my sector slow stochastic, which is a 21K 3D stochastic. It just works really, really well. And I've got the 200 propulsion here. That's the only one that's running. I've got things like my automated Darvis, right? I might move to the Darvis 3.0. Right now I'm running Darvis 2.0 because this is the free version. But I might move on over to the Darvis 3.0, which is really so much more, I think, powerful, because when you have the Darvis, And let's see, you see the free Darvis there? Yeah, anything that has a little lock next to it means that it's premium. And you'll notice that I don't have locks next to some of the primary tops tools, Darvis, propulsion, grab candles, right? You'll see I don't have those there. So that means you can go put them on your chart. But I do have a couple premium ones. And the Darvis Premium is cool because what it does is it allows us to notice a very important price pattern called the minor high and minor low pattern. I've seen a lot of folks who clearly are not students of history when it comes to trading strategies. Um, you've probably seen it called lots of different things, but it's a minor high or minor low, and it's a higher high surrounded by two lower highs, or it's a lower low surrounded by two higher lows. It's a very powerful pattern, and the Darvis 3.0 identifies that because one of the things that we found that is part of a really good Darvis box, and we've modernized this. I've altered it a little bit, but I love giving homage to those traders that came before me. You know, we all stand atop the shoulder of giants. Um, and say, hey, look, this is where I learned it, but I tweaked it, right? That's what it should just sort of evolve with every new generation of traders. So took the basic ideas of Nicholas Darvis and said, I think we can make this a little bit more applicable to the current environment. And that minor high, minor low is a big part of that. So Darvis 3.0 identifies that. So it just depends on what indicators you want. But on TradingView, it's really easy. And so is it hard? No, it's just going to take a little bit of time. And you're going to have to go into the indicator section and activate it. But yeah, pretty easy. Yeah, pretty easy. All right, next up. Does UNH look like it's organizing well enough to start supporting the S&P? I'll tell you what, Robert. No, not yet. And the S&P doesn't really need just UNH, right? I would say it needs right now, the next most important domino that needs to fall, if you will, is financials. The UNH impact can be somewhat offset by things like Johnson and Johnson and Lilly, although lots of the overall healthcare sector is not pretty, right? And UNH is just a really strong example, exaggerated example of what happens when traders presume that just because the broader averages are moving higher, so too will stocks south of their 200. UNH has been in a tricky spot for a long, long time. So I don't know, but if I were to look at this the way it looks at the moment, I do not have high hopes quite yet. The kind of formation that I need to see form has only given us quick momentum type moves to the upside. For example, the quick momentum type move was basically as we took out the high of the Wednesday gap down candle. But as far as bigger, longer term structure, maybe the weekly might be one place to go. I'll tell you what, if we're going to sell off like crazy on UNH and I'm looking at this weekly chart, I would say, come on down to 415. The water's fine. And I would look at a far longer term time horizon, more of a portfolio position trade. Look, weekly and monthly charts, gang, frankly, have no business in a shorter 1 to 3 day, 2 to 10 day swing trading type approach. It's rather hilarious how often I see weekly and monthlies discussed to justify a trade that might only have a 1 to 3 day time horizon or 2 to 10 days. These candles form once a week. And so a lot of times traders will end up with outsized risk because they're justifying a trade based on a level on the weekly. This level on the weekly should ideally correspond with something happening on the daily. But if we get down to 415, this could be a very interesting level from which to put on that longer time horizon. And then when we get down to 415, I would prefer either a pattern or that the UNH is giving us some justification why I would also like to be long. That would give me that shorter time horizon, but I don't need it, right? I don't really care what's happening on the daily if I'm going to trade the weekly, but it'd be cool if they did give their own individual, their own unique setups, but not yet. I'm not seeing that yet, my friend. No. All right. What else do we have here? Last question is the NQ overstretched? Any question that has us trying to predict the future, right? How much higher will it go? Emanu, No one can answer that. Now, plenty of people will try, right? But no one can answer that. So what I would say, as long as you're buying dips, not that you're buying higher highs, right? If you've got long positions and you're booking gains, you're doing it right. So congratulations. We need little pullbacks. We enter on the little pullbacks and we look for the market to retrace its steps and maybe put in a higher high. If XLK, XLC, XLY continue to fire on all cylinders, I won't be surprised if we're talking about 16,000 sometime, in the future. Are we going to pull back from time to time? Of course, right? Of course. The next big known catalyst is going to be, what does the Federal Reserve do with the July rate decision? But other than that, I'm just going to follow the trends and wait for the dips and buy into them. And so, well done. Well done. All right, gang. My futures folks, my mastery folks, I'll see you in the chat room at 9:30. So in about 10 minutes. And we'll go to about 10:15. All right. Okay, gang. Be good to each other. I will talk with you soon. Thanks as always for being here for Charts and Coffee, my caffeinate and dominate crew. All right. Be good to each other.